So let's go on Legacy Hack subscribers. We're back as normal. Got Jack and Kyle. We're all together. The trifecta is in full effect. I kind of like that too, right there. Hey guys, but appreciate you guys tuning in. Again, we're all about helping you be educated about the this whole concept of infinite banking, family banking, whatever you want to call it, privatized banking, cash value, life insurance, hacks, all these things. But really, at the end of the day, we want you to be informed. And so today, boys and girls, all right, today I decided to throw into Chat GPT the struggles, the 10 common topics and challenges that people are, exploring and trying to figure out with infinite banking. And what were those? And I'm going to read this list that ChatGPT spit out to me, and then we're going to kind of riff on this right now. So, without further ado, here we go. Y'all ready? Number one, understanding the concept clearly. Number two, finding the right policy design. Number three, trusting the actual advisor or agent. I find that kind of interesting right there. Number four, cash flow strain from actual premium commitments. That's an interesting one. How to actually use the policy properly. Number six, integration with broader financial plans. Seven, explaining it to your spouse or business partner. I can relate to that one because I actually had to explain this to my spouse, which was interesting. Number eight, tax implications or policy maintenance. Number nine, what happens when the policyholder dies? And number 10, to round it out of our top 10 right here, creating a family banking system, not just a policy. So those are the top 10 things that ChatGPT obviously went out into the interwebs of the world and found as the most common things that are challenges to IBCers. So, Kyle, I'm going to throw it over to you, buddy, to kind of riff on this a little bit. What's your thoughts on this top 10 list?
Sweet. Well, first, thanks for putting this together because when we came into this conversation today, I was thinking we should talk about all the mistakes that are being made around infinite banking because it's not hard to make them. It's a complex strategy. Well, I mean, when we first walked through this list, I mean, just before getting on this, and again, as you're reading through it, I'm realizing how true this is. It feels like a lot of these fall under the umbrella of not being connected with your advisor or agent and not
Mm,
having either a good, strong connection with them or even a good strategy in place with them. Because one, the concept is extremely difficult. So if we were to just pick out one of these that I think is like the responsibility of your agent, not your responsibility, ironically, of all of them, it would probably be explaining this to your spouse or business partner. Because if you find yourself having to explain infinite banking, a strategy that's taken me 4.5 years to barely wrap my head around, I mean, I feel like I've got a pretty good grasp on it, but just the same, like if you aren't even working in this space, but you want to implement this into your greater strategy, then having a strong relationship with your agent and being able to sit down with them and look through your finances and where you're going and have this integrated into what you're doing is critical for being able to use it. So I thought it was funny that the third one is trusting the advisor or agent. Because even in a way that does also falls a little bit under that umbrella. Like if you're feeling like you have to take a huge trust fall and you're not able to see the some of the underlying components of the policy or fully understand the concept, which is the number one thing on here, then I just think that there's probably a miss with that connection.
mm,
And I think that that probably comes from the lay of the land and the territory because this concept has gained a lot of traction and pithy on TikTok and Instagram. I've even met financial advisors that are like, "Oh yeah, infinite bank, you do that's all you do, man? Oh, I throw that out on the side, it's not a big deal. It's an easy thing." And then I'll be like, "All right, cool. What's your split?" And they're like, "What split? What are you talking about with the split there?" I'm like, "Well, you got your base premium, and then you usually have your. Oh, I don't do a split. It's 100% to premium." And then it's like, well, then how do they borrow against it? Well, you got to wait. The cash value doesn't build up till you're in your 50s, 60s. That's how these things work. And I'm like, you have no idea what you're talking about.
Mm.
And that one right there is probably going to speak to number four, cash flow strain from premium commitments. So you just got into a policy with somebody who's really excited about his commission check. It's about to hit the bank because we aren't over funding your policy properly and putting cash in there that you can use tomorrow. We're actually just paying for premiums on a big fat death benefit um, that may or may not align with your needs. Whether it's sold that way to you or not, there's other ways to achieve a nice death benefit without having to put these cash flow strains on their policy. So I do think that a lot of the alignment here just really comes down to the person you're sitting across from and realizing that one, it's their responsibility to help you understand it. Um, and you're probably not going to get it all up front. And even when you start using it, I had a meeting with a guy this week and he's had his policy for 2 years and something clicked with him this week that I thought he knew before we started his policy. And we were just doing a quick review and he's like, "Oh my gosh, good thing we're doing this review. I'm going to have to do this and this. I'm moving this. What do you think about that?" And we, leaned into his strategy together. We were looking at his whole portfolio, we're looking at his investment opportunities. He's talking me through a current private placement and we're weighing whether or not that is a good alternative for him, or a place for him to allocate loans from the policy. And so I just think that if you're not working with an agent that's leaned into your strategy and that has feels the responsibility, like I know each one of us do, to make sure that you're educated, hence why we're making these videos and content. We want to add value back to the people that we are helping or could help. So that was kind of a main umbrella that I was just kind of felt like a theme throughout these 10 is that there's got to be an underlying disconnect there. Or maybe it's your choice to not allow that person in to see your whole strategy or you're holding it at an arm's length. And um, it could be either one of those two things. But that one seemed to be connected to a lot of these on this list. But I'd be curious to hear your guys' thoughts as well, because we haven't really gone through all this yet.
No, it's totally fine. I mean, again, I think it's interesting, that how that even the third one down is, or third one we actually are talking about, a trusted advisor is it plays such a huge role because yeah, Jack, is there one that kind of jumped out at you, or are you kind of looking at it from a holistic standpoint? This whole list, what's your thoughts?
Well, first of all, let me get that advisor's client list so I can 1035 all those policies, Kyle. Uh,
Yeah.
Let's clean them
um,
all up.
yeah, what stands out to me, and it's interesting, like I think so much of being a trusted advisor or agent that your clients can really come to and benefit from your knowledge is actually doing it yourself, like practicing infinite banking. Like I know for me, I'm 5+ years into my own policy and have additional policies across my family now, and can literally explain how to use it by talking about the 6 different ways I've used policy loans and how I've funded flexibly over the years. So that's a big value. Not to say that early on agent can't be that, but to actually have the lived experience of what you want to guide your clients through is huge.
Mm,
Um, and I feel like that touches on a lot of other things, like how does this integrate into your broader financial plan? I can actually talk on that a little bit because I think I have kind of been on a spectrum with this of like when I first learned about IBC, I was like, oh, like cash out the 401k, like throw everything into this. And I don't think I would encourage that uh, generally. I think, yeah, IBC is a great, and cash value life insurance is a great place to store your liquidity that you, yeah, want to use maybe as an emergency fund at first. And then as it grows, as cash you can use for down payment on real estate or other investments. That's a lot how I've used it. Um, but you also have creditor protection, which can be valuable to a lot of people. You have when you get to the retirement phase, like a cash or a volatility buffer. And I actually spoke to a financial advisor as well who's very positive on cash value life insurance in a plan and sounds a little more intelligent around it than the guy you talked to, Kyle. But he said he shoots for his clients to have 3 to 5 years of their retirement income in cash value life insurance by the time they retire, so that if there's a big market drop while they're taking income, they can just take a policy loan for the amount they need from their policy in that year, wait for the market to rebound, and then maybe do a higher withdrawal to pay off the loan that you took out in the year that you needed it from the policy, so that you're replenishing that and leaving a full death benefit for your spouse or kids. Um, yeah, and then just, yeah, the reality of, like, this isn't as much permanent insurance, but we've had enough times, like just across our team, people who have a spouse pass away with young kids. So I think just to emphasize the need for life insurance in general, like it's it's tragic when you see a GoFundMe pop up for a young family with a lot of kids for the mom or dad. Like that's just tremendous burden that is often unnecessary given the pretty cheap pricing around term policies. So um, yeah, it definitely touches every part of a plan, life insurance, and when designed well and it's a cash value policy, it can pour a lot of gas on the things that you're up to, investment wise as well. So that's one that I am developing a greater appreciation for, like how it fits into the big picture for people.
Yeah. The one of the things that, as you guys were sitting there talking, and I was just looking back through this list, um, it I really do believe that when people come to approach this IBC, this thing, okay. Yesterday, yesterday I was asked. I was sitting across from a gentleman, basically talking about infinite banking, explaining it to him. I mean, he's he's probably not a good fit for IBC because he's much older in years and so forth like that. More of the annuity side, maybe Jack. But come back to that later on. Ha. Um, but he was very intrigued by it, and he asked me a question. He said, "So Tyler, what's the downfall? What's the con with this?" And because I've been here, I've been practicing this now for the last 5 years. Like you, Jack, talking about that you've had your own policies, and here I am in the fifth year of you know my policies and Amy's policies and the kids' policies as well. The first thing I said to him, this probably downfall, which kind of relates to a lot of these things right here, is this is a business. Okay. And anytime that you're going to go into business, there is a learning curve that you have in order to understand what that business is going to do and how to produce income with it and how to use that business. And, just, Kyle, you talk about the right advisor. I definitely agree with you that, a lot of these misconceptions here can be, or landmines, if you want to call them that, can be removed or stepped around with the proper advisor because you have an advisor for a business. I mean, what what person would love to have a coach that has this type of business before and knows how to not step on that landmine or say, there's that landmine right there. You're getting ready to step onto it. And there's where that advisor comes in. But for that business owner to take ownership of understanding their business, that to me sits there and says, with these different ones of like the tax implications and policy maintenance. Well, I mean, goodness, if you're going to run a hot dog stand, you got to have some different things that you can know to go along with running a hot dog stand. Okay.
Mm.
There, even as simple as a lemonade stand. Well, you got to know how a lemonade stand operates. It's no different than this right here. And I feel like people, kind of glaze over the whole banking side of it, because banking is a business. And I feel like that
Mm.
it's there's this thing. That's why this whole continuing education thing of why we're doing these episodes here to help our clients, to help someone that's actually investigating doing IBC begins this learning process. And it's a never ending learning process. Does that make sense, fellows?
It does, Tyler. It sounds like you're kind of speaking to number 10. You're saying, we're creating a family banking system.
Mm,
And I know you touched on several of them with what you just spoke through. I think you said it really well. Like, yes, at the highest level, the biggest pitfall is probably the complexity of it. Like,
yep.
and there is a learning curve to that complexity, which is why it's number one on this list, is understanding this concept clearly. I'd be curious to hear your thoughts if you have any. I'm putting you on the spot, but as you lean into like number 10, like what does it mean to create a family banking system to you?
So to me, the system basically, number one, it means longevity of what my family has created and can continue to create. Um, and how we're able to keep, the money together. So for example, right now, here's here's the systems working within itself. Tyler Jr. is getting ready to turn 16. He's got his eye on wanting a vehicle. Okay. Well, I've already started to explain to Tyler that, okay, hey, we can look at a certain amount of money, but this is going to come out of our family banking system here. And Tyler, we're going to have to agree upon a payment plan that you're going to pay this back with. Okay. And yeah, and I need to explain to Tyler the benefit of why him paying back our bank. Okay, because that's a whole other thing right there of just being able to explain this whole system and um, business that the family has. Okay, how it benefits him, why he would do that. Okay, it even gets into the whole side of things of me actually explaining what interest is to a 16-year-old, which he doesn't totally understand that totally, but he it definitely affects you in your whole entire life. But anyway, going back to this whole thing, now all of a sudden the system we start to make money on ourselves, and we start to help each other out instead of me going outside of our family to go and benefit somebody else's pocketbook versus our own pocketbook. Okay. Um, and so that's why the creating this family banking system is really, honestly, if you get down to what I'm just going to, maybe I'm going to step out on this and maybe you guys can pull me back in if you feel like, but I feel like that if you're an infinite banker, if you really are bought into it, if you really see this as something, I think the holy grail, I think the end goal should be for it to become a family system that you actually work within and keeping the money together through this whole concept of family banking. I mean, I've got plenty of stories I can go off of that are other people that I've read about, that I've studied, where that they've been able to help, put a down payment on their kid's house because they took a loan out of the parents' policy, and the kids are paying that loan back from them, and all that interest is being dumped back into the parents' policy, which is eventually going to go to the kids. And this is the system that you can have. So I hope that answered your question, Kyle. But that's where it's really, again, down the road what we're trying to get to.
Yeah, I was hoping you were going to lean into a personal story and share something because I was like, I know you're practicing this with your family and that you're passionate about it. But it's interesting because when you were talking about like that picture, you painted that picture for us of you handing your son the banking opportunity to take a loan from the family bank to buy a car. It's like that one conceptually is extremely attractive. And I think people would love to do that. We just don't know how to do that in society.
Mhm.
And it actually got my wheels turning because I'm working a lot with business owners now. And it's like what we end up doing with our kids is, well, let me introduce you to the bank, and then they'll give you a loan for your vehicle. Or some people, let's save up, let's pay it down. Like I'll go in with you and we'll both buy the car together, kind of what my family's model was. Um, but interestingly enough, like when you think about like how a business owner interacts with their cash flow and saved money, like they may have cash or reserves on hand, and if they spend it, the language that they'll use is now we have to replenish our funds. Versus if
Right.
they were loaning the money to themselves and just changing the language around. Now we have to have a payment system and repaying our loans and prioritize because somehow businesses, at least ones that are healthy, a lot of the times they do have some kind of external line of credit that they're operating off of, and they know how to pay that line of credit back and replenish that line of credit so that they can then use it again and again. And so somehow it's like, how can you consistently run a business for 10, 15 years in some cases with this one line of credit and never have internalized it? Because for some reason, once it comes in house and it's in our savings account, it's cash, it just changes our relationship with it. And I think that's one of the things I've gotten to see happen in doing this strategy with business owners is once they bring this like internal line of credit via their policy into their business and they're borrowing against it and using it to fund a vehicle purchase for the business and the company, then they're paying themselves back and they're having to like force themselves the same habits that they would with their relationship with an external bank to wait for the next vehicle until we've got the capital on hand and the ability to then go do that. And I just think that's an interesting like thing that gets unaligned. And it was like very clear when you said that. That's like, yeah, you're creating access to this internal family bank, but it's not just that; it's the legacy play of teaching your son how to do the same thing for himself and for his family, and then for his kids.
Right.
Yeah.
I mean, trust me, it's not like something that I can just kind of nonchalantly, oh yeah, here you go, Tyler, here's $10,000, and not explain it. I miss an opportunity as a parent with that. Okay.
Absolutely.
And, this is where, I mean, I know I'm not going to get into legacy stuff, but again, I'm pretty passionate about this whole side of things, right? But I know we got to land the plane here. Jack, anything you want to riff on what we were just kind of covering right there?
Yeah, it reminds me of a podcast. I think the Wealth Without Wall Street guys did, like really honing in on like when this is interacting across generations and even like a grandparent parent generation, whether through inheritance or business success, like has really capitalized a policy and you treat loans to family members like real loans and do the education that you're describing, that's when this gets powerful. And even when there's guidelines around like, hey, you can access this family bank for a business, real estate, or education. Maybe a major purchase too, like a car you could throw in there. Um, but that's when you get alignment and culture and how it works. And
It's
then
huge.
death benefits as those roll in, that is large capitalizing for the next policies and yeah, it just becomes what you said, like has longevity and like yeah, I mean you get into the families like the Rockefellers and it's like holy smokes. Like that's yeah, and they're unique and controlling oil for a long time in our country. But um yeah, I think
But you're
it's
right,
awesome
Jack.
what you're
It
up
it
to.
takes it. You're right, Jack. It takes an education, to educate. If you really want to have a system in a business, you've got to educate, your kids now. So that
Hmm.
puts a little bit of a responsibility on you. So you got to understand what you're doing. That's why, people have all these questions about like, finding the right policy design. Okay, well, look, there's an education process, to that. And I just feel like that, what Kyle was saying, what you're saying of educating each other on these things and educating our clients and people that are interested, Yeah, it takes time. It's not a microwave process at all. It never will be. It doesn't
Mhm.
need to be. If it is, that advisor's like saying, "Oh man, we can get you in a policy here in the next 2 weeks." Run.
Yeah, and just to second what you just said there, Tyler, we're talking about habits that are
Mm,
ingrained in how we look at our finances, money, what we're doing. So just because you built a cool policy doesn't mean that you just created a family banking system. You now have to change the way you think about money, and that's candidly the greatest benefit from it. Maybe the greatest challenge to change those habits and to have that get through that learning curve. But I think the greatest benefit that any one of us that have done this have walked away with is the education and the way that we change how we think about all of our funds.
amen. Amen. All right, guys, we're going to land this plane. So, guys, this was Legacy Hack subscribers. Uh, thank you so much, Jack, Kyle, as always. Thank you so much for being on air and giving us your words of wisdom, as always. And, I will say this, guys, subscribers, hey, look, if you find any of this interesting, you got questions about stuff, our Calendly links are down below in the description below. We're available. We're not trying to hide from you. We want to be honest. We feel like this is a great concept. It's not right for everybody, but it's right for few. The ones that actually do want to try to understand this and learn from this. And we want you guys to actually understand this. So hit us up. So without further ado, we're going to land this and put a bow on it. Y'all have a great one. See you.